In August 2025, core inflation in the US remained steady at 2.9%, according to the Federal Reserve's preferred measure, the Personal Consumption Expenditures (PCE) price index, while headline inflation, which includes volatile food and energy prices, edged up to 2.7%. The core PCE remains stable, signaling that inflation is not spiraling out of control. This consistency reinforces the Fed's decision to implement a quarter-point rate cut, supporting economic activity without fueling runaway inflation. Core inflation stability. The core PCE remained at 2.9%, still above the Fed's target of 2%, but stable enough to avoid major policy shifts. The Fed is likely to maintain its gradual rate cuts, with 2 additional reductions anticipated by year-end. Consumer spending and strength. Despite inflation pressures, consumer spending and income showed resilience. Personal income rose by 0.4% and PCE accelerated at a 0.6% pace. This continued consumer confidence is contributing to sustained economic momentum, even in the face of high living costs. Tariff impact. The initial concerns about tariffs raising prices have been limited, with goods prices only rising slightly by 0.1%. Businesses have absorbed some of the cost impacts, and Fed officials view tariffs as a temporary shock rather than a long-term inflation driver. Stock market reactions. Markets responded positively, with Treasury yields dipping and futures rising as the economic data indicates moderate inflation and bolstered the expectation for further rate cuts. Housing costs and inflation. Housing costs, a significant contributor to inflation, saw a 0.4% rise, and the Fed will monitor this closely as housing affordability could signal longer-term inflation pressures if left unchecked. The Fed is poised to further ease rates to support growth, but will also continue monitoring inflation. Economic data, particularly from consumer spending and housing, will guide future policy decisions. The stable inflation rate and strong consumer spending indicate a steady path forward for the U.S. economy, with manageable mortgage rates and borrowing costs expected as 2025 progresses. For direct financing consultations or mortgage options for you, visit Nadland Capital Group.